In this video, we're going to be analysing Virgin Galactic, ticker SPCE. So to get straight into it, we can see we're gapped over 25% on the day. We're now sitting around $5. Again, just so you know, make sure you're in the Discord because we did throw out how we're playing this before the videos, or before we have time to make the videos and send them out. We did talk about getting our entries here as it retests this two-day anchored VWAP, locking in profits coming in the way to 5. So we already got the day trade from it. But what are other key levels to be paying attention to, and potentially from a swing trading perspective? So overall, the levels stay the same. So you can see obviously we gapped up from around $4. We moved all the way and opened up around 570. On the open, we came up, we hit 590. This is our second deviation on the 6 month. On the 1 year. So as soon as we hit this, we do expect that sell-off pressure, which we did. We broke through our 560. Now we're continuing to that downside. Obviously, we locked in some profits coming into $5, just a key psychological level in general. Now, if we start to break this, which is most likely going to happen, we're then paying attention to the supports at 480 and 575. So again, just as a quick disclaimer, I do actually have a position in this right now. We've taken out about 80% of the size now. We're just holding this last bit of the position, if we can, down to around 480 with a break-even stop. Our stop's around that area is around 537. So that's more kind of the day trading outlook on this. Now, what else would I be paying attention to? So we went through these second deviations, we went through these first deviations. Now, what happens if we continue moving to the upside? Because one thing to note is actually what did happen. And as soon as we can throw on the extended hours, what you can see is actually pre-market or after hours yesterday, we got that big move and we came into our kind of the favorite levels that we trade, and that's these green ones. These are our third deviations. Whenever stocks come into here, small cap or large cap, doesn't really matter. We look to play against it because stocks very rarely stay above this level really at all. So if they come up to this level, that's when I want to hit that short buy. So we can see obviously it did happen after hours yesterday. I didn't really trade pre-market or after hours, so I didn't catch that move, and so instead got the opening move. But what this does mean is if we do push back to the upside, we're still looking short buys at the 635 and the 705. 705 is really going to be my favorite level. If we can get there, that'll be a relatively big size short bias trade. And what I really like with the SPCE is not only is it easy to grow and making it easier to trade, but you also have access to options. So again, we can define that risk very easily. So those are the key resistances on the downside. We talked about the 480, the 475 supports, and we have this final level here at 4, basically where we were yesterday. This is what is considered fair value on SPCE. So fair value, if I'm a reversal trader like I am right now, trading to the downside, then $4 is going to be that absolute final target. I'm never going to look to hold past that level. And in this case, I probably won't even be holding to it on these small caps. I don't really tend to trade them to fair value. I tend to keep them more as a day trade or quick swing. So 480 is going to be where I probably get out the majority, if not all of the size. But if we did continue down, $4 would be that final target. Now again, because that is a target doesn't mean it's a support. This is one of the only cases where I don't buy, because again, this is fair value. From a trading perspective, doesn't make sense to buy from this area. If you're looking at investing at the stock, then this level or below is ideal. Now again, if you're a long bias trader, you're a trend trader, these levels can still be used. We'll be paying attention to the 480, 475 for a potential bounce opportunity. And again, that's why we're taking some profits as soon as we get that bounce. We lock in or kind of move our stop to break even, because we may continue that downward trend to fair value. But if we don't, again, we want to be in potentially for that. So if we play the bounce, or if we play it as a bounce, we move us up to break even. If it's only a bounce, that's fine. We get out of the trade, break even, maybe a tiny bit of profit. But in the other case that it catches a trend or a bigger bounce, then we can play to 560, 590. And again, we can have relatively tight stops on these, because if we break them slightly, we're probably going to break all the way through. You can see in this case, about 15-16 cent stop would have been fine. You're probably looking at the same one here. If you broke below probably 440, 450, then you're probably going to want your stop around there. So that would be kind of my range for a stop, looking to target 560 at a minimum. So there's definitely opportunity in these kind of bounces. Depends what trading style you have, whether short or long bias, and that's it. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.